This is Jim Martin, Senior Currency Strategist at Elliott Wave International. Today I wanted to take an opportunity to discuss the one indicator I use besides the wave principle. I'm often asked about what other tools that I use, and typically I'd say really none. I'm pretty much a purist in terms of using just the wave principle, and I keep it very basic. Count to 5. Wave 3 is not being the shortest. In the fifth wave, can I count 5 waves? Then I think the market should be near an extreme and a turn is due. A correction of a 5-wave move, the guidelines tell me, often returns to the area of the previous 4th wave, often towards the extreme of that 4th wave. So I just stick to simple rules and guidelines such as those and watch the wave pattern as it develops. However, as I said, there is one tool I use, and it is a momentum indicator. You can see on this chart that I have RSI, but I could have chosen stochastics or any of the other momentum indicators. I don't think it's going to matter much. Let me just show you how I use it. The wave principle suggests that the third wave, in this case I'm using Euro-Swiss on a daily chart, that the third wave is typically the strongest wave. In this case we have 5 waves to the downside, so the third wave is a decline. The point of recognition is some point in the middle when people realize what the trend is, usually as you break through the bottom of wave 1. What we're looking for is somewhere beyond that point for momentum to bottom, and you can see here that it bottoms not exactly with the bottom of wave 3. Well, in this case it actually does, but many times it'll bottom a bar or 2 early. If wave 3 subdivides into 5 waves of its own, momentum may actually bottom with wave 3 of 3. But in this case they bottom together, and then during wave 4 momentum recovers, and in the 5th wave, which makes a new price low, you do not see the same low being made by the indicator. You have a divergence. In this case, that would be a bullish divergence. We see this all the time. If I showed you a chart of a bull market, 5 waves up, the odds are that the 5th wave would also diverge. It would be a bearish divergence. Momentum would have peaked in the 3rd wave. The 5th wave would have seen an increasing momentum indicator, but the value of the indicator not reaching the extreme that it reached within wave 3. And that just makes sense. That is something, if you read the wave principle book, while this discussion about the indicators are not in there, when you look at the guidelines and you look at the characteristics and read about those, this is pretty obvious stuff. And this is the indicator I use. Now, where it gets more interesting is that in this case, we can see in wave 5, there is also a 5-wave decline. 1, 2, 3, 4, 5. So if I take this chart down to, say, 120-minute level, so that way we can see the entire decline. You can see that there are 5 waves within it. You can see that, obviously, here is the 3rd wave. That's where it accelerates, also the longest wave. We look down here at momentum, we can see again momentum reached its extreme during the 3rd wave, and again in this case at the bottom of it. 4th wave unwound. The 5th wave went to a new price low, but not the indicator. It was falling at the time of the 5th wave, but it did not make a new low extreme. So again we have, on a different time scale, we have a divergence. In this case, again, a bullish divergence, suggesting a possible low at hand. And that's what the wave principle is telling us. So in the case of Euro-Swiss, I would see on the daily chart, looks like 5 waves coming to an end. Then I would go down to an intraday chart and see in the 5th wave, not only can I count the 5 waves down, but I can also see the same divergence setup occurring. So it adds confidence in both regards, structure and the momentum divergence. This is just a tool I use. It's secondary. You can look for this divergence on any time frame. I don't count how many bars back it must be or anything. Just keep it simple. So we'll leave it there for today. I hope you found this helpful. As always, please send in any comments or suggestions you might have. Thanks again.